The housing market in Toronto is absolutely collapsing, and in Ontario in general. And we're going to get into exactly why that happened and just some of the unbelievable amounts of percentage of buyers that have been speculative, because it is quite frankly mind-blowing. But then you come to realize why this market is imploding on itself right now. It's all to do with the speculative nature that we've seen obviously happen. So Toronto region condo sector sees deepening slump as sales fall 81% in the third quarter. You're talking about sales falling to lows not seen since the 1990s real estate crash in Canada. Remember when everybody said buying a condo was a bulletproof investment? You've still got a lot of those realtors that are now on YouTube and they're saying, you know what, it's crashing, it's all falling apart. The same ones that were there saying, oh, this is a bulletproof investment, best investment that you're ever going to make. And now they're there saying that, hey, this market isn't so good. I guess they've got no job left now. So anyway, new condo sales in the Toronto region have hit a 30-year low as investors have turned away from the market and buyers can find more affordable resale options. Only 567 new condos were sold in the third quarter of this year, marking an 81% drop compared with the same period last year. That figure is 87% below the average for the past decade and the lowest since the first quarter of 1995. And what does this really tell you? Because you've got so many buildings that are under construction right now and are going to complete. I think Hilliard said it was a mind-blowing number, like over 50,000 units are going to come online over the next couple of years. Quite frankly, there's no market for them. And guess who financed those properties? It was developers, but they got the financing from the financial institutions and the banks. Why do you think private debt to GDP is so high in Canada? It's because private businesses, mainly developers, absolutely leveraging up to the maximum here. So anyway, it's kind of insane. But then it goes on to say, for the first 9 months of the year, 3,641 condos were sold in the Greater Toronto and Hamilton area, which is a 63% decrease from the last year and an 84% lower than in 2021. The trend suggests 2024 will be the slowest year for condo sales since 1996, Urbanation said. So just think about that, guys, because so many people have tried to spin that narrative that the spring market is here. Oh no, the spring market, that didn't exist. So now it's interest rate cuts. Interest rate cuts are here, guys. That's going to be the thing that propels this market upwards again. Meanwhile, as we've said on this channel, and as even RBC is now coming on and saying as well, is guess what? The labor market is going to offset that, and it's going to offset that by not just double, not just triple, but 5x the amount. So it's going to be even worse than having interest rates at 7 to 10%, having unemployment at 8 or 9%, which is where we're headed, guys. It's where we are heading. So a key reason behind the decline is a lack of activity from investors who typically drive sales in the Toronto condo market. So that brings me on to this article here, which is fantastic. Ontario's big cities saw investors buy up to 85% of condos fueled by government incentives. So this is really, really great. And it shows how many people bought these condos, investors, over the past couple of years. Investors own 2 in 5 Ontario condos. They bought most of the new supply. Ontario real estate investors are consuming an even bigger share of the condo market. They owned 43.5% of all condo apartments in the province, up nearly 1% from a year before. As high as that is, those numbers imply that 65% of new condos added in the province that year are owned by investors. Those who assume investors target big cities are absolutely correct. Out of the 10 largest CMAs, the highest concentration was in London, Ontario, where 85.5% of condos are investor owned. That is just mind-blowing. That is over 3/4 of the market owned by investors. I mean, that is just unbelievable. Honestly, I mean, you just can't believe that, but you can, because that's why the prices increased so much. So anyway, the top 3 rounded out with Windsor, 64.4%, and Kitchener, Cambridge, Waterloo, 60.7%. It's worth noting that all three of those markets are typically considered college cities. That can be a problem with the shift in student policies, which we'll get into in a second here. So Ontario's big cities have seen investors buy up to 85% of condos. Share of condo apartments owned by investors in Ontario's largest census metropolitan areas. So you got Ottawa 40%, Kingston 46.5%, Oshawa 33.2%, Toronto 38.9%, Hamilton 40.8%, Niagara 54.7%. You've got Kitchener over 60%. Then you've got London at 85.5%, Windsor at 64.4%, Barrie at 36.1%, and Ontario as a whole at 43.5%. So massive share of investors taking up the condo ownership here. And you've just got to think about markets like Calgary. You know, once these diamonds in the rough, places like Barrie, those markets are now absolutely awful. And once diamonds in the rough like Calgary are going to take a turn to the same fate, unfortunately, it seems likely anyways, probabilities would suggest, especially with the unemployment rate in places like Calgary and Edmonton. So very interesting. And you've seen condo sales explode in those areas as well, mainly driven by investors as well. And obviously the investors are really staring at a burning house right now, because Canada saying they're going to cut immigration remains to be seen whether they actually do anything about it, but they're saying they're going to lower the targets. Obviously we know the targets, they don't mean jack, because they've been ignoring those for the past couple of years anyway. I mean, the laughable thing here is it says the number of temporary residents will decrease by about 30,000 to 300,000 in 2025. So that implies that 2024 was 330,000 target, but I think we're on track for over 1.2 million. So are they really listening to these targets? I don't really know. I don't think so when you really look at the data. They're saying that they're going to reduce permanent residents, which seems more likely, because obviously permanent residents are actually the things that you want to the country. You want that skilled migration coming in through the permanent resident streams. You don't want all these temporary residents that are essentially for the oligarchs and the low wage, low skilled jobs. But that's exactly the opposite. We get all the temporary residents. That's how most immigration comes in. And unfortunately, most of that is unskilled. It's been exploited massively over the past 6 to 8 years. I don't need to tell you that. Student visas, different categories have just been absolutely exploited to the maximum. But this is interesting because landlords, speculators, they're in trouble because they rely on immigration to keep those rent prices going up, and that's just not going to happen. And then also I saw this chart on Twitter. Workers in every Canadian province earn less than workers in the United States. So you can see it has all the states here, and then it has the provinces in Canada. So you can basically say, and I love this as well because it's median employment earnings. They didn't actually do the average, they did the median here. And you can basically see what this looks like. It's not good when you really think about it. You've got basically places like Alberta taking the top spot, but at $38,969. That is just a terrible median income. Might be the highest in Canada, just edging on BC there. But you can see compared to the United States, I mean, it is way below the worst states in the United States. So obviously, and as Staples Sol points out here, you can see it's just a little bit off the screen there, but with housing costs being 50% higher as well, you've got all this going on. So it just goes to show the problem situation that Canada is really in right now with its economy, with the amount of immigration that's coming into the country, with not having the jobs. The economy is imploding. The economy is, of course, based off the housing bubble and the government, two things that are simultaneously really starting to implode. At least those narratives around them remains to be seen on the immigration front. So anyway, I want to thank you so much for watching this video and this live stream. If you've enjoyed it, please check out this video here. And if you're looking for a VPN to protect your privacy, then help support the channel as well, go to expressvpn.com/marketmania for the best deal on the best VPN. I will see you in the next one. Take care, guys. Bye-bye.